Is your Venmo activity about to trigger an IRS audit? Have you heard whispers of a new $600 reporting rule and felt a cold shiver run down your spine, wondering if your casual reimbursements for dinner or concert tickets are suddenly going to land you in hot water with the tax man? You're not alone. This topic has generated a whirlwind of confusion, anxiety, and even outright panic for millions of people who use payment apps like Venmo, PayPal, Cash App, and others. For years, these platforms have been the go-to for splitting bills, sending birthday money, or even getting paid for a quick side gig. They felt informal, almost like cash transactions, largely flying under the radar of official tax scrutiny for most casual users. But then came the headlines, the social media chatter, and the panicked questions. $600? Really? Does this mean I need to track every single penny I send or receive on Venmo? Let's clear the air and break down exactly what's been happening, what the Venmo $600 reporting rule actually refers to, and more importantly, how it truly impacts you. We'll delve into the history of this change, the constant delays and adjustments by the IRS, and what you need to know to navigate your digital transactions without unnecessary tax stress. The confusion stems from a provision in the American Rescue Plan Act of 2021, which aimed to lower the reporting threshold for third-party payment networks. Historically, these platforms were only required to report transactions to the IRS if a user received over $20,000 and had more than 200 transactions in a calendar year. This higher threshold meant that most casual users, even those with a side hustle, rarely tripped the wire for receiving a Form 1099-K. However, the American Rescue Plan Act proposed a drastic change, reducing that threshold to a mere $600, with no minimum transaction count. The intention behind this was to broaden the IRS's visibility into income generated through online marketplaces and payment apps, particularly from gig economy workers and small businesses that might have previously gone underreported. Now, it's crucial to understand that while this new $600 threshold was enacted in 2021 and intended to apply for the 2022 tax year, it didn't actually go into effect as initially planned. The IRS, facing immense feedback and concerns from taxpayers, tax professionals, and the payment industry about the potential for widespread confusion and an overwhelming number of 1099-K forms being issued for non-taxable personal transactions, decided to delay its implementation. So, what happened next? The IRS has essentially adopted a phased-in approach, adjusting the threshold multiple times before the $600 rule would fully apply. For the 2022 tax year, the old $20,000 and 200 transaction threshold remained in place. Then, for the 2023 tax year, the IRS again delayed the $600 rule, opting to keep the higher $20,000/200 transaction threshold for another year. Fast forward to the 2024 tax year, which you'll be filing in early 2025. The IRS set a new, interim threshold, $5,000. This means that if you received more than $5,000 in payments for goods and services through Venmo or other third-party payment networks in 2024, regardless of the number of transactions, Venmo would be required to send you a Form 1099-K and a copy to the IRS. And for the 2025 tax year, which you'll be filing in early 2026, the threshold is set to drop further to $2,500. It's only starting in 2026 that the much-debated $600 threshold is currently slated to apply. But wait, there's a new development. As of July 2025, there's been another significant change. A recently passed bill, often referred to as the One Big Beautiful Bill, has reinstated the original reporting threshold for Form 1099-K. This means that, retroactively to 2022, and going forward, third-party payment networks like Venmo are only required to send a Form 1099-K if a user receives both more than $20,000 in gross payments and has 200 or more transactions in a calendar year. This is a massive shift and effectively rolls back the controversial lower thresholds that have been causing so much concern. So, let's recap the journey of this rule. Pre-2022, $20,000 and 200 transactions. Initially planned for 2022, American Rescue Plan Act $600, no transaction limit. Actual for 2022, remain $20,000 and 200 transactions, IRS delay. Actual for 2023, remain $20,000 and 200 transactions, IRS delay. Actual for 2024, $5,000, IRS phase-in, but now potentially retroactively nullified by new bill. Actual for 2025, $2,500, IRS phase-in, but now potentially retroactively nullified by new bill. Starting 2026, initially planned $600. New law, signed July 2025, retroactive to 2022 reinstates $20,000 and 200 transactions. This new legislation changes everything and will likely alleviate a significant amount of the anxiety surrounding Venmo and other payment app usage for personal transactions. Now, let's talk about what types of transactions are and are not subject to this reporting, regardless of the threshold. This is a crucial distinction that many people initially misunderstood. The $600 rule, or any reporting rule for Form 1099-K, only applies to payments received for goods and services. This means that personal transactions are generally not reportable. What constitutes a personal transaction? Splitting dinner bills, your friend Venmos you their share of a restaurant meal. Reimbursement for shared expenses, your roommate pays you back for their half of the rent or utilities. Gifts, money received for a birthday, holiday, or other personal gift. Paying family members back, you lend your sibling money, and they repay you. These types of transactions are explicitly exempt because they are not considered taxable income by the IRS. The intent of the Form 1099-K is to capture income generated from a business or commercial activity. However, if you're using Venmo to receive payments for selling goods, this could be anything from selling crafts on Etsy, flipping items on Facebook Marketplace, or even selling old furniture. Providing services, freelance work, dog walking, babysitting, tutoring, consulting, or any other service for which you are compensated. Then those payments are considered taxable income, regardless of whether you receive a 1099-K. The 1099-K is simply an information return that helps the IRS identify potential taxable income. Even if you don't receive a 1099-K because you don't meet the reporting threshold, you are still legally obligated to report all taxable income on your tax return. So, what are the implications, especially for small businesses, freelancers, and those with side hustles? For small businesses and independent contractors, the new, higher threshold of $20,000 and 200 transactions means less administrative burden. The previous confusion and potential for a deluge of 1099-K forms for smaller amounts would have been a headache for many. With the higher threshold reinstated, many small businesses and gig workers who earn less than $20,000 or have fewer than 200 transactions may not receive a 1099-K from Venmo. However, it bears repeating, all business income is taxable. You still need to track and report this income, even if Venmo isn't sending a form to the IRS. With that said, thanks for watching and until next time.